Today we are going to talk again about a sector, a subsector from the sector commodities, and we are going to talk about diamonds, but mainly about lab-grown diamonds. What is it? We will explain it, how the process works. Should you invest in it and why?
Correct.
Because it's a fast-growing market, Martin.
It is.
Year to year, 38% up. And what we say, almost every week, you should invest in a sector that grows. Because then you know, okay, the whole sector is growing. So if my investment holds its percentage of market share, I will have a really great future.
That's true.
38% year-to-year growth for the subsector lab diamonds. The whole diamond sector is around 17 billion euros, and the lab-grown diamond sector is around 12 billion euros. So still not on the levels on the, but in 2016 it was only 1 billion. So you see, it's growing really fast now. Wow, why it's growing so fast? I think there are 4 advantages from a lab-grown diamond. One of them is conflict-free. If you see where the main diamonds are coming from is Russia. Yeah. I don't have to explain further about the conflicts that are around Russia. The environment, to take a normal diamond, a natural diamond out of the ground, is a really intensively energy consuming process.
Absolutely.
From the mining, and it's much cheaper. A lab-grown diamond is around 70% cheaper than a natural diamond.
True.
And the quality is better.
Yeah.
So I think, why shouldn't you buy it?
No, there's no reason to not do it.
So you see, a lot of people are buying those diamonds. Mm-hmm. So are there companies where you can invest in to benefit from this growing sector? Yes, there are. Is it a difficult sector? Yes, it is, because the biggest company in the world that produces them is a company from Belgium. It's called Stone Lab Grown Diamonds. It's not on the stock market, so you can't buy it. There are a lot of startups, smaller companies and a little bit bigger companies that invest in this sector, and those are normally not on the stock market. Now we are going to talk about 3 companies. They are on the stock market. We start with the big one, then I have a really small one, and you have the best one.
I have the best.
You have the best one at the end? Yeah, you have the best one.
No, Casper, that's the logic.
It's all about Louis Vuitton, Hennessy Louis Vuitton. They invested in a company that produces lab-grown diamonds. They invested 90 million, and especially about the process to generate, because it also needs a lot of energy, because the normal process of growing a natural diamond takes millions of years. They can do it in a month, so you understand it takes a little bit of energy.
It takes, yeah.
And they invested 90 million in the company Lucix, and they provide a process with mainly the energy, where the energy mainly is coming from solar panels. On the contrary, Tiffany, that's of course is part of Louis Vuitton. They say no, lab-grown diamonds are no luxury diamonds. So we stay to natural diamonds. It's the same for Bulgari and Chaumet. They say the same. And Prada, for example, they are more in the line of Louis Vuitton, and it's also like Tag Heuer. They say they bring other products on the market with natural diamonds. Tag Heuer, for example, made a watch. $360,000 with fake diamonds or lab-grown diamonds. So they're all not always cheap. So if you want to invest, if you believe in this subsector, you should, I think, not invest in Louis Vuitton, because it's a minor detail. But I wanted to show that also the bigger companies, they are not on the same path, but some of them, they believe in it and they invest a lot in it. So I think it's and this sector is a little bit conservative. So
of course,
you can understand that some companies are still holding on to the no, we only want to, and you can't see the difference. No. You only can see the difference with a special look.
Yeah, but, and it's still, I heard it's not possible.
No. I have a small company, but it's an interesting company to go to the website, and they explain the process very well. They have a short video where they explain how it works. It's called ADMS One Corp. So it's a US company. It's trading on the Nasdaq. They have 36 patents. So they have they're holding quite some interesting patents for the whole process. But still, they're not doing well. The stock went down in 1 year from $2.50 to 50 cents. It's also because they don't make a profit yet. They make a small loss, and the turnover is not even 2 million, not billion, 2 million. So I think if you go on the stock market, you should not look for those smaller companies. What is interesting, what I explained in the video, that what they do, they have a membrane. They put 50 small pieces from around 0.7 centimeters by 7.7 centimeters on that membrane. Then they heat it for a month with more than 1,000 degrees Celsius. And they do it with carbon-rich gas. And then within 1 month, they create from every piece, all the 50 pieces, they create 6 carats of diamonds.
Really?
Rough diamonds. And then they send them to India to cut. And they got them back and they can do whatever they want.
Wow.
And the result is that the lab-grown diamonds, they only have in 2% of the cases errors. And with normal diamonds, it's 98%.
Yeah, so you have a lot of loss.
Yeah. Yeah, so it's a really, the prices are much lower, around 70%. This company, only look at the side, but really be careful with investing in it.
Well, it's incredible. I mean, think about I mean, you can't control nature, but you can control this whole process. So if you know how the process works, it's fantastic. Yeah, it's amazing. I have another company which is also active in the lab-grown diamond business, but they are also active in the broader spectrum. So the diamonds, what are they used for? Well, for drilling, of course, but also, of course, the main thing, what people pops to mind is, I think, the jewelry. And the company is called Signet Jewelers. You can buy it on the New York Stock Exchange for about $100. And the company has its own private label of lab-grown diamonds. And what is interesting about this company is that they generate a revenue of about $7.7 billion US. So that is a lot of money. And also, if you look for assets versus debt, they are at almost 7 billion of assets versus 1 and 3 billion of debt. So they do have debt, but it's for companies quite normal. But if you go further, they pay out a dividend, about 1%, which is also nice. But then if you look at one of the most important factors to buy a stock for fundamental investors is the price earnings. And the price earnings of this company is based on the earnings per share, of course, $10 earnings per share. So 100 divided by 10 gives you a price earning of 10. So you can buy this stock for a relatively cheap price. Not because it's worth 100, no, because of the fact that you only pay 10 times the earnings. So yeah, in this case, you're buying a really big market player active in the lab-grown diamond. So if you believe in this trend, yeah, you can pick up Louis Vuitton, but they do it for like a fraction of it's like residual what they do in this sector. And here they don't make a statement. They believe also they believe in lab diamonds, but they believe also in natural diamonds. So they offer them both.
They're both consumers, so if they see that there's more demand on the lab,
clients,
they sell this.
Yeah, exactly. So it's an interesting company to have a look at. I think it's not something that you it's something as an Apple of Tesla of Microsoft. It's a company that is of course smaller, but it has substantial added value from an investment perspective. If you look at the price chart, also it is if you look at the price of 5 years, it's at a quite high level. The price is 100, which is almost the all-time high. But based on the price earnings, you can do the calculations, you can do the math. You're very positive about the lab-grown diamonds. On the other hand, there's also, if you look at it from an investment perspective, from if you receive some diamonds from an inheritance or something, the lab-grown diamonds decrease much quicker in value. And so, okay, that's good for the natural diamonds. Then no, because as well as the lab-grown diamonds are going down because there's a lot of supply. You said it's growing by 38%. There's a lot of diamonds coming to the market. That has also drawn down the price of the real natural diamonds from $5,000 from a carat in 2016 to $1,425 at this moment. So it might be a boom, it might be not. It is something that you should, I think, to keep an eye on, because it's a sector that, as you say, it's growing. You said at the beginning of your statement that you always want to invest in a sector that is growing. I think we gave 3 companies, different ones. Louis Vuitton, of course, we all know. Adamas, interesting because they only do this. Look at their website for the video, I think. Because that makes you gives you an understanding of how the process works. But all in all, I think you have to be careful with investing in it, no? Casper
we didn't talk about, but the beer of course group is controlling the price of diamonds.
Yeah, we talked about it, I think a year ago.
And when the ban came on Russian diamonds, but this is much more controlled by the market. And what I always understood is that there are so many diamonds. It's not that the price is not made by supply and demand, but it's made by the beer group now. And if you see there's another supply sector with the non-natural diamonds, then those prices are finally under pressure. And it's really difficult. I think it's interesting to see what will happen in the next year, because if you have a bracelet and you don't see the difference and it costs you $10,000 or $1,000, always there will be people that they believe and that holds its value. But I think maybe you sell 12 of the 1,000 instead of one of 10,000. I think it's an interesting, fast-growing sector. So, and it's also not a young sector. They only exist for around 70 years.
True.
But now, because they have new developments, they can make it from an investment perspective or from a commercial perspective. That's interesting to produce them. It was always too expensive.
I agree.
So we tried always to bring up new sectors where you food for thought.
Absolutely. Thank you for watching. And next week we see each other again with some quarterly figures now.
Yes, then it starts again. Give us your time.
Thank you.